It's a very good problem to have. It means that you've done something right. It means that either you invested well, you worked for a great company, for a long time and received a lot of equity compensation. And what we find most times is that it's simply that stock has simply done so much better than markets that what wasn't a concentrated position, suddenly has become one. It eventually becomes a trigger point in those conversations where clients remember what happened in 2022. They remember what happened in 2020, 2009. It just becomes a conversation about, I like what I see on my statement. I like the way I'm at right now. I want to change the risk that I'm taking without, sacrificing the taxes, without sacrificing a growth vehicle, right? So it always leads to the conversation of what does that destination portfolio look like? Cash has been a really well-received conversation starter, very well-received tool. I think that the ability to shift from a concentrated position that clients are used to the growth that they've experienced in their stock, not sacrificing that and going to what traditional exchange funds had offered, which was kind of like going from a Lamborghini back to a Buick or something. It was a difficult conversation to say, I want to go from Meta back to AT&T, the NASDAQ 100, at least for clients that are coming from a similar type of stock. A similar high growth, high technology based stock is by far the most apples to apples. The NASDAQ 100 is an interesting vehicle and an interesting index. If you look back at it over any 7-year period, you have a lot of leadership changes. It's a very competitive index. And so to get on top of that index by a market cap weight, you have to do something very well. And so by benchmarking to that index, from our view, what you're getting is almost an insurance policy that whoever the next leader is going to be, you're going to be participating in that as well. I think the modern approach that's been taken, both in respect of the fees that are being charged, the ease of operations, and the modern element, I think has been a very powerful tool, both for advisors and for, I think, what clients should expect from both wealth managers and from types of vehicles that they should be invested in. I think it was a lazy business for a long time and didn't feel the need to innovate, didn't feel the need to reduce pricing, to increase capacity. I think that has been the biggest differentiator and the biggest improvement that we've seen in the space, arguably since its inception.